green, up almost about 3% odd. Bei, the Director, Chief and Hong Kong China Strategist at CIMB, so he tracks both the Hong Kong and the Chinese market closely, joins us on the phone line to discuss all that has transpired so far. Ben, good morning and thanks for joining us. It's been a clean run on the upside for global markets, at least for the last couple of weeks. Do you think the worst is now behind us?
I think actually, in short term, I think the worst is behind us. On the Hong Kong-China market, we can see actually in past 2 weeks, the Hong Kong market has rebounded about 10 to 15% from the bottom already, which is backed up by some fundamental improvements. For example, after China government carried out a lot of growth protection policies, for example, they actually try to boost the property demand by cutting the down payment ratio for property market, and also they carried out some auto stimulus on the auto market as well. And on the macro data, we saw actually improvement of the PMI, official PMI data in China as well. So actually that all at least convinced some investors that China is trying to stabilize its growth. While the Hong Kong market has rebounded in past 2 weeks, as we saw that Asia actually has been suspended due to the Golden Week holiday. So actually they need to catch up some upside once the resuming trading. That is why we saw some divergence of the Asia versus Asia today.
Okay. Ben, is there any other Chinese data that you would watch out for this week or early next week?
Yeah, actually we will have the September data maybe late this week and early next week. Overall wise, our expectation is that it will be broadly in line with what we saw, because that will take some time for the government policies to be reflected in those macro data. But for some leading indicators, for example, the loan and M2 growth, that should be happening.
Sorry, M2 growth?
Upside. Yes.
Okay. Okay. Any other industrial data? Yeah.
Actually, there was one very important data released yesterday, which also is a very positive factor. That is the reduction of China's foreign reserve, which has been in September. The number has been coming down for about 40-something billion US dollars. That is almost just 50% of the reduction in August, which we saw about 92 billion. So actually, that is also a very big confident boost to the market.
Okay. Since you track some of the other Asian markets as well, we've got some slowdown in data coming in from, say, Japan. This morning, the machinery orders in Japan have fallen 3.5%. Are you worried about any other pockets, or do you think that the data is improving there as well?
I think for those industrial data, it will take some time, at least several months after the China's government policies, starting from June to July. So I'm not expecting that a significant improvement on that kind of data in these 2 months, but I expect to see some stabilization by end of this year and early next year.
All right, Bei, thank you very much for joining us with all those details about China. So, well, the Chinese